The dollar is on track for its biggest weekly slide in almost 3 months as concerns about the US banking system add to worries about trade and the shutdown. Alarms are sounding over credit stress in the US banking system. Zions Bancorporation said overnight it would take a $50 million loss on 2 loans in the third quarter. That's helped send short-term Treasury yields to multi-year lows as traders increase their bets on Fed cuts. That's just the latest worry about the health of the US economy in a week that's already seen fresh nerves over trade with China and a government shutdown that now looks set to drag into week 4. Jane Foley is head of FX strategy at Rabobank. Jane, various signs of weakness have got traders pricing in more and more Fed cuts. How far might they go? Could we see 50 basis points?
Well, that certainly is part of the conversation right now, but we have had some members of the FOMC cautioning against that, perhaps looking for a more moderate pace. And given that we do have an absence of official US data right now, I think probably 25 basis points increments are probably far more likely from the Federal Reserve. But the market has become quite panicked. But we must put this in some perspective around not just the activity today, but around what we've been seeing in recent months. Certainly, we've been hearing quite a lot of concerns about maybe there's overvaluations, that the market could be in bubble territory even when it comes to AI. So we've all heard the phrase recently that the market has been priced for perfection. And I think in that instance, perhaps it wouldn't take an awful lot of bad news to get the market to enter into a risk-off or a sell-off phase. And I think that's what we've been seeing today.
As you pointed out, we've had no official US data for almost 3 weeks now due to the shutdown. But are there rising signs of economic weakness filtering through that might justify this dollar sell-off?
Well, we have certainly seen some weakness, for instance, in the private sector payrolls data, the AFP, for instance. We have seen the weakness of the labour market coming through. But we've got to remember that, yes, the dollar is weaker today. It was weaker yesterday, but it's still the best performing G10 currency on a 1-month view. In fact, what we've been seeing in recent weeks, if you go back just a week or two, we've been seeing some short covering in favour of the dollar. The dollar really has been, of course, on the back foot for large parts of the year, but during the summer, it's been far more stable. So today's sell-off comes in the context of actually the dollar having done much better recently.
How did FX markets react to this week's tension between the US and China? Do traders see this as posturing or something more?
Well, it could be something more, but I don't think the market is as nervous or as anxious about this type of news as it was clearly earlier on in the spring. If you take us back to April, the market was extremely anxious and nervous about what Trump could announce in terms of trade tariffs. And what we saw then was a rolling back of this type of news. And therefore, when we hear another increase or another bout of warnings from Trump, the market is a little bit more skeptical as to whether or not he will actually push through with this type of news. And that means that the market, whilst becoming a little bit more anxious, doesn't react in the sort of way that it did back in the spring.
What about the US shutdown? There seems no end in sight. Does that worry traders?
I think the longer it goes on, then the longer it could have, or the bigger the impact it could have on growth and also on just the general degree of uncertainty and doubt about the size of the US deficit and the US debt and the fiscal worries or the fiscal implications from this US government could become a little bit more worrisome. For now, however, the market's managed to park this. It is an ongoing concern, but it's not something that right now is causing undue amounts of stress.
A lot of the upside that we've seen keeping confidence in the US lately has been around huge AI investment, but you think other currencies will see some of that upside too, don't you?
Well, certainly there has been some indication that perhaps we are seeing that. Now, if we look at countries which may benefit from AI investment, well, ones that have come up are potentially the UK, for instance, and Sweden has also been up there on the list. This, of course, requires some degree of government movement in policy to attract this sort of investment. But if we look at the size of the Swedish market, the liquidity in the Swedish krona specifically, well, it is quite small. And therefore, if we do have this degree of inward investment, it can have an impact on the currency. Now, the Swedish krona has been performing really quite well recently, and it is possible that it could be linked with this type of inward investment.
That was Jane Foley of Rabobank. Don't forget, you can watch more videos on Reuters.com.